Now, President Trump is looking to deregulate the banks. On Tuesday, he said that he wanted to loosen restrictions on consumer lending as he and his Republican colleagues and some Democrats are looking to push or to roll back Dodd-Frank. Now, on Tuesday, during a White House event, he said he wanted to give banks the freedom to loan to customers deemed too risky under Dodd-Frank, the sweeping post-crisis financial rules enacted back in 2010. Now, he said, quote, "We're looking now at Dodd-Frank because we have to free up so the banks can loan money to great people because they were restricted." Wait, what? Again, when you read the quotes from Donald Trump, it almost seems like there's like a typo in there or something like that, or there's missing words. No, that's how Donald Trump speaks. We got to free up the banks so they can loan money to the great people because the great people were restricted. Well, if they were so great, why were they restricted? That seems weird. But on the greater point here, if you want a recession, that's how you get a recession. You deregulate and you allow the banks to loan to people who are not great people, right? Or at least they don't have great credit, or they are not trustworthy enough with the money, or can't afford to pay back the loans. Things like that. And I'm going to get into the details here, right? So this bipartisan Senate deal, right? Again, corporate Democrats and Republicans working together to deregulate the banks, right? What it would do is it would expand the range of which loan applicants could be considered as qualified borrowers. Now, what does that mean? Hill explains that Dodd-Frank set stricter standards for who could qualify for mortgages or loans after hundreds of thousands of foreclosures derailed the economy back in 2008. So basically, there are a lot of people out there that couldn't get loans that ended up getting huge loans. Now, before you say you're going to blame these people for crashing the economy, that's actually not what happened. There was actually a lot of fraud. I'm going to get into that. But first, I want to go to a study here, right? Now, this came from economist Atif Mayan of Princeton University and Amir Sufi of the University of Chicago. And they wrote a paper about the practice of overstating a borrower's income in order to obtain a larger loan. So that is the fraud here, right? Now, they found that incomes reported on mortgage applications, such as zip codes with high rates of subprime lending, increased much more quickly than incomes reported on tax returns in those same zip codes between 2002 and 2005. So they looked at a couple of different areas, right? And those areas were generally more low income. But suddenly, the banks are getting all of these loan applications for mortgages that were actually showing very high incomes that are higher than that general area. That seems a little off, right? So, and if you say, oh, yeah, that does seem a little off, you would be absolutely correct. That is that's one of the problems with fraud. Now, it turns out that it's not people, the borrowers that were overstating their loans in most cases. It was actually the industry, people in the industry that were falsifying loan papers and making people qualified for loans that they wouldn't normally be qualified for. These are loans that they would not be able to pay back. These are called liar loans. Now, another study published in 2014, researchers had examined the 721,000 loans made by one certain unnamed bank between 2004 and 2008. What they did is that they found widespread income falsification in its low documentation loans. Now, those, of course, as I said before, those were called liar loans. These real estate agents, what they would do is that they would do these liar loans. Furthermore, in a 2010 book, journalist Michael Hudson said that they used scissors, tapes, whiteout, and a photocopier. And this is, I believe this was Ameriquest Bank. They would use all these different things to be able to falsify tax forms. He said it was easy. Paste the name of a low-earning borrower into a W-2 belonging to a high-earning borrower, and like magic, a bad loan prospect suddenly looked much better. He said that workers in the branch equipped the office break room with all the tools they needed to manufacture and manipulate official documents. They dubbed it the art department. Now, look, were all of those loans fraudulent? No, I'm sure some people just didn't understand what they were getting to. That does happen. But the majority of these loans were absolute fraud, right? In fact, some of the nation's largest lenders, including Countryside, Wells Fargo, and Ameriquest, overstated the incomes of borrowers without telling them to qualify them for larger loans than they could afford. And they were all caught by they were all caught doing it. Now, did they get punished? No, they did not get punished for their role in creating this housing crisis, which was a part of the 2008 financial crisis, right? That took down the economy. So, now, look, the reason that these people would do this, falsify these loans, is because they would make commission. So that's what they did. They did these liar loans, and they ended up getting commission, which ended up, of course, making them lots of money. So after, this happened and all these false loans came crashing down, Dodd-Frank, which, look, I've criticized it as a pretty watered-down, weak bill, but it was designed and put in place to put a stop to that. Now, unfortunately, the Republicans and Democrats and Donald Trump want to undo those rules. The banks claim that these rules prevent banks from lending to longtime trustworthy customers that fell on hard times. Now, let me tell you who I think that means. Donald Trump. Now, President Trump has a history of taking out bad loans and then not paying them back. He's also went bankrupt, I think, 4 to 6 times, 7 times, something like that. I forget. So he's went bankrupt after taking out these loans. His companies have went bankrupt. His casinos have went bankrupt. Again, how do you bankrupt a casino? I have no idea. But that's what happened. So no bank in their right mind, maybe except for some Russian banks or Deutsche Bank, won't lend to him anymore. And so I'm betting when he saw the words Dodd-Frank, he's like, that's why they're not loaning to me anymore. That's why they won't loan to my business. So we got to get rid of Dodd-Frank. Maybe that's it partly, right? Maybe it's not. I mean, maybe all the banks just know better than to lend to Donald Trump. I don't know. He does have a track record of stiffing banks, but maybe Dodd-Frank might have something to do with it. Now, here comes the bad news, right? With all of that context, the measure, sponsored by Senate Banking Committee Chairman Mike Crapo, is backed by enough Democrats to beat a filibuster. These Democrats include, and there's 11 of them, they include Heidi Heitkamp, Senator Joe Tester, Joe Donnelly, Mark Warner. So in total, it has 11 Democratic co-sponsors. These are, of course, the usual people, right? Joe Manchin, and like I said, Claire, Heidi Heitkamp and all them. So it's bad news, man. So we're going to have more bank deregulation. So look, I am convinced that there's an economic crash coming. I hope I'm wrong. But boy, are they setting it